Hi, Tim Bigham back again this week, and our theme song this week comes from the Talking Heads, which is "Stop Making Sense," or to use one of their song lyrics, you know, "Same as it ever was, same as it ever was." This market just continues to defy any kind of pullback here. Had consumer confidence come out today that was way below expectations. Market, as always, thinks more free money coming. Weak, you know, is better, bad is good. So market rallied on the fact that the consumers are really a lot less confident than they have been in well over a year. S&P's perked up on that news. Bad news continues to kind of flow a little bit out of not only Europe, but now China and Japan, as China is certainly going into a soft landing. We'll see if it's a hard landing. Japan looking like they're heading for recession. So the world really is putting on the brakes. Australian home sales came in way below expectations. So let's not forget, it's not only Europe on the table here, but if we get the combination of the European debt crisis continuing to spiral higher and higher, and China and the rest of the East slowing down dramatically, I think we could be in for a rough patch here. So going forward, I still taking a cautious viewpoint, looking to continue to buy some SPY at the money puts out in October, looking for a quick scalp there. And speaking of China, that market has been down 10 days in a row up until today, looking at the FXI. So the valuation discrepancy there is extreme. We're looking at about a 13.5 PE on our market here, under 9 on China. We're also looking at the fact that since the beginning of the year, China is actually down. We're up, you know, somewhere around 12.5%. So that performance discrepancy is the widest it has been really since the FXI came on the table. So we're looking to rotate out of the S&P 500 and into the FXI slowly. Just really think going forward that for our market to head appreciably higher, China is going to have to be a positive, not a negative. Given the fact that China has already taken a drubbing here, we really like it on a comparative basis. So selling slightly out of the money, about 5% out of the money, put spreads on the FXI, and looking to buy those SPY puts, kind of a pairs trade, looking for the FXI or China to outperform our market over the next couple months. And speaking of outperformance, the high-end retailers have been on fire, to say the least. A couple stocks that we're looking at as a little too frothy would be Michael Kors and also Tiffany. Both of them came out with earnings. In the case of Kors, a decent number. In case of Tiffany's, they actually missed. Both these stocks just rallied hard on the news. You know, granted, they were probably a little bit cheap in front of that, with everyone expecting maybe high-end to fall off a cliff. But given the fact that these stocks are up about 30% in a week and a half, and implied volatilities has absolutely collapsed, we're taking our counter trend position, buying at the money puts on both these names out in October. Again, looking for a pullback and looking for that froth to come out of these stocks. So until next week, as always, keep your position sizes proper and make sure you have your stops in place. This is Tim Bigham. We'll talk to you next week. Bye-bye.